Hello and welcome to the FinTech Finance Virtual Arena. Today we're going to be talking about how FinTech and AI are enabling small medium enterprises to finally get access to financial services that they probably should have had a couple of decades ago. So joining me today is Gord Baizley from JUDI.AI. Gord, how are you doing today?
I'm great, thank you. Thanks very much for having me. Looking forward to this conversation.
Well, it's an absolutely brilliant one, and I think it's one close to a lot of people's hearts, because ensuring that people can get access to financial services, if you're in the fintech industry, is really, to me, what it's all about. So thank you so much for joining us here today. Now, for our viewers that might not be aware, could you give us a bit of background to yourself and JUDI.AI, please?
Yeah, absolutely. So me personally, I'm actually a lawyer and an investment banker by training, going way back, but I've spent the last 15 years scaling high growth tech companies. Was with a company called Vision Critical, which was at one point number 5 on the Deloitte Fast 50 list in Canada, and then a company called Diply, which was actually number 1 on the Deloitte Fast 50 list in Canada. So I've been lucky enough to be along for a couple of really hyper growth rides in Canadian tech companies, and so I really enjoy that sort of phase of business, and have attached myself to JUDI, I guess, for a couple of years now, and looking forward to a similar ride here with JUDI. And so JUDI was formed, was actually incubated within an alternative lender here in Canada called Lendified about 6 or 7 years ago, and we were really formed to solve the problem and challenges of small business lending, which are that there's a lack of access to capital for small businesses because small businesses are hard to lend to. They're risky, the analysis is tricky, financial statements aren't always reliable, the credit scores have low hit rates. And so we were using technology and data to solve that problem and provide for a better lending experience and hopefully expand access to capital. So we've been doing that ever since, and started reselling our platform to third parties outside of Lendified. So.
Interesting. Now, there's an elephant in the room, and that is obviously the pandemic. Now, I think it'd be remiss for us not to kind of touch on it slightly, in the fact that how has the North American SME sector fared during the pandemic? And actually, if I could ask just for the rest of the discussion, does JUDI.AI operate in both Canada and the United States?
We do, yeah. Yeah, so and there's a lot of similarities in the market across those two markets, just because the government responses have been very similar. So to how they've been supporting SMEs through it all. And I guess I would say it's a sort of a two-pronged answer in terms of how they've been faring. First of all, obviously very tough. So no question, it's been hard on SMEs. I think the last stat I saw in the US, 35% remain closed, compared to pre-pandemic numbers. So those are big numbers. Having said that, there's been a ton of government support, and both countries go into supporting SMEs. There were some lessons learned out of the 08-09 crisis, where access to capital, it took about 10 years for access to capital to recover for small businesses. So I think people were watching that data, and that's why all this government funding has flowed. So despite all the fact that a bunch remain closed, there's been a lot of support, and we've seen across our platform, starting in about February and into March, a little dip in April, but we've seen a pretty good recovery in terms of application volumes for loans across our platform, and approval rates are coming up. They're still not where they were pre-pandemic. So I'm optimistic that things can recover quickly as we get vaccinations rolling out and caseloads down. And I think the fire in small businesses to bounce back is there, and we saw it pop pretty quickly when things started to look up. So.
Brilliant. Well, that sounds optimistic. And before we kind of dive a bit further into your guys' technology and your offering, I want to kind of ask really we call it obviously the high street here in the UK, but I'm interested in what you think Main Street will look like after the pandemic, as we're seeing SMEs kind of actually start looking to alternative lending, digital solutions as well. We're seeing restaurants, for instance, get access to Deliveroo, Uber Eats, everything like that. Do you think we'll see Main Street look really different after the pandemic?
Yeah, again, the optimist in me says that, there may be some positive change out of this for Main Street, because there was a fair bit of disruption starting already pre-pandemic. And I'm not sure Main Street was reacting to it as quickly as they should have. And this may force that reaction to keep them competitive, whether it's, like you say, food delivery or e-commerce. you look at Shopify's numbers. Shopify's are Canadian tech darling here, and they're now doing almost $1 billion a quarter in revenue, supporting small businesses to take their businesses online. They're growing at almost 100% even at that size. So small businesses have reacted and have adapted, and so those changes should serve them well and should persist, post-pandemic.
Brilliant. Now, one of the kind of big technological shifts, even though AI has been probably at the heart of a lot of technology over the last 10, 15 years, it's still considered almost science fiction. So, I mean, can I ask, what role do you think AI will play for SMEs going forward?
Yeah, and I'll speak, to keep it tangible, I can speak more specifically in SME and the access to credit and just what we've seen over the last several years and how it's helping. And so, if you look at where SMEs went for credit 10 years ago, it was to the retail division of a big bank, basically. And then, as is often the case, disruption happened outside of the incumbents, and there started to be alternative lenders that started looking at data in different ways, different data sources, and using machine learning models to incorporate that data. And that's the alternative lenders. There was initially in the US, there was Cabbage and On Deck and a bunch of those larger players, and there's been a bunch of smaller ones. And so that started a trend of disruption towards using alternative data. And then you can look at, then the Shopify's have come into it. There's sort of platforms, I guess, Amazon, eBay's doing a little small business lending now. So there's a whole bunch of new players coming in and providing access to capital using new data sources, which basically allows them to expand the credit box. One of the key pain points small businesses have always sort of reported is the lack of access to capital. You can look at any given survey, it's almost always 50% of them will say, access to capital is my top problem. And so if we can solve that top problem through technology and AI, like that's a big shift in the world of SMEs.
That's completely brilliant. Honestly, I just absolutely love it that we can utilize this technology to provide this almost bespoke or even granular service to just the simple mom and pop shops that really haven't even digitized themselves. So to hear that just absolutely just warms my heart. Now, one thing that is also really important is the fact that the traditional banks, I think it's fair to say, I don't mean to throw them under the bus here, but haven't really been operating in the SME space at pace. I mean, as you said, after 2008, it was about 10 years for funding to get actually capital to get to these small, medium enterprises. So do you think the banks are going to continue this role of kind of offhandedly not servicing SMEs? And are we going to continue to see players like yourselves completely take up market share and really consolidate the SME market?
Yeah, it's an interesting question as to where it'll all go, and there's a bunch of different players going at the SME market from different angles. So you've got the big banks that are of course always there. You've got fintech lenders and alt lenders like On Deck and those types that are starting to recover from the pandemic. You've got again the platforms like Shopify, like Amazon, Intuit, they're coming at it, and you've got us we're supporting community banks and credit unions in approaching the market. We actually think that our point of view is actually those players have an interesting advantage if they can get the technology and the data that's available to some of the larger players. They have an interesting advantage in that they have the relationships, and small business banking is still relationship based, and they have the local knowledge, which is important too in small business. So there's an interesting dynamic there where all of a sudden those players could have the best of all worlds, and hopefully that could provide an elevated level of service to that segment of the market.
Yeah, and I love hearing because we don't actually have them in the same sense, community banks here in the UK, and hearing these kind of banks that are small enough to be kind of local, but also big enough to kind of actually have a weight of technology behind them. It's really quite exciting to hear that model, and it's absolutely brilliant to hear how you guys are embedding with that to kind of offer up this even enhanced service. Now, why has it taken so long for the banks to specialize and innovate in this sector? Why has it taken tech companies, AI companies to offer up financial services?
Yeah, I think A few different reasons. I mean, as I mentioned, first of all, disruption often happens outside of, the core of an industry. So that's just a pattern we've seen over and over. Why did Uber have to disrupt taxis? Couldn't they have built the same, similar dynamic at play there? I think there's a few other things going on. There's a regulatory component here that slows things down too. So everybody's very cautious when it comes to lending because of the regulatory side of things. And then there's just the fact in small business in particular, small business lending is just really hard, right? So to solve that with technology takes time, and the tech had to evolve. And the things that certainly in our company, in our sector, that we're seeing or doing today are very different than even 5 years ago. So there's an enablement that's gone on that has really changed things. And then there's just the cultural side of it. And so that cultural side, when you're in a highly regulated institution with a lot of tradition, that's going to be hard to push, massively new ways of doing things. So
interesting. Now, speaking of pushing those new ways, here in the UK, we've seen open banking, PSD2, to really kind of bring that regulatory shift to reduce some of the risk when it comes to opening up. Now, I'm interested in your perspective from North American institutes. Have they had the same governmental pressure? You mentioned that the lending side has actually been quite favorable from the governmental side. Do you think that maybe the regulators in the United States and Canada are actually going to start opening up and forcing innovation through regulation?
There's certainly a lot of conversation about it. A lot of the conversation, is about that it's been too slow as well. So I think what I'm seeing now is the market isn't necessarily waiting for the regulators to take it over and do it. There's sort of open banking in quotations kind of type solutions emerging. The account aggregators in particular in the market are moving away from, they've basically had a quasi form of open banking using screen scraping technology, and they're evolving into direct connections into the banks and partnerships directly with the banks that effectively create open banking. Or sort of modern connectivity, as one of them calls it, and so without a government endorsed regulatory framework, they're kind of going there anyway. And so it'll be interesting to see whether that takes hold or whether that drives a government regulatory framework. But either way, it's starting to happen, and I know certainly in North America we're behind the UK on this, but hopefully it will catch up. I think it would be great for consumers and small businesses.
Incredible. Now, I kind of want to refocus it towards you guys in particular now. We've had the overarching holistic view. You see the advancements in digitization now. Business customers can give you a lot more data. So, I mean, what insights can you provide these community banks or banks in general that use JUDI.AI to kind of maybe even upsell and kind of ultimately provide a service that maybe some customers didn't even know they could get?
Yeah, so I mean, there's I guess we can start with sort of exactly where we play right now, which is in credit. So we can help them just expand the credit box and provide more credit and provide it earlier. And pre-approvals have been around for a long time, but we can do that in a more effective way with real-time data. So that's definitely one. And again, improving access to credit solves one of the major problems for small businesses, right? So that's a key one. But beyond that, as we're looking at all that data, there's other opportunities buried in that data too. So, like you mentioned, cross-selling, personalization, upselling, whatever you want to call it, there's tons of gold to mine out of the data we look at. So is there an opportunity for, are they collecting cash at an over-indexed rate compared to their peers? And should we have the wealth management team come in? Or is there an insurance opportunity? Or did they take on some debt with another institution that you might want to have a conversation with them about? So all kinds of opportunities in there to cross-sell, upsell, personalize offers, etc., beyond just credit.
Incredible. Now, if we could then move away from the kind of product side of things and look at the customer themselves, how can AI be used to ultimately improve their experience of using a financial service? Because it's typically not one thing someone wants to be doing with their time.
Yeah. There's beyond just personalization and getting more access to products. I think in our world of credit, there's really two drivers from the customers end. One is speed and automation. So, and it, it used to take into the months period to get a small business loan, certainly weeks and days. We can get, a preliminary approval for one of these small banks and credit unions in 7 minutes. So you can go on, sit with your advisor or go online and fill out a form and the screen will cycle for a few seconds and you're at least at a yes, no, maybe, which is pretty remarkable. And from there, some of the clients we work with, they can be funding within 24 hours. So that's a pretty massive shift for small businesses. And then beyond that, again, it's this expansion of the credit box. So with this kind of data, we benchmark our models and performance against the use of a credit score, a consumer credit score only, because that's the most widely used way to benchmark something. And we can essentially, using these alternative data sources and machine learning driven models, we can expand the credit box by 35%. So what do I mean by that? You could at the same risk level that you would take on by lending using a consumer credit score, you can lend 35% more. And so
that's not a small margin.
Those are big numbers when you get up there. Now it's benchmarked against a credit score, so there's a lot of range in between a credit score only approach and our approach. So there's different institutions are going to fall in different places along the spectrum already. But the bottom line is there's big gains to be had, and there's again a lot of momentum to solve that access to capital problem for small businesses here with the use of technology. So
it's incredible. Maybe 10 years ago, or 20 years ago, the banks, the only way that they could improve their take home was by reducing risk. And as a result, they became adverse to innovating. And now with these data sets, with this technology, they could have been innovating years ago. It's incredible to hear this, and to up, by 30%, that's absolutely amazing. And also not just for the banks, for their customers as well. That's the meaning between really shutting up shop forever or continuing on and going on and thriving through after the pandemic. Now, speaking of that, looking to the future, if we could kind of wrap up, I'm going to give you a kind of crystal ball, big question here now. What is the future for JUDI.AI, and really, what's its role going to be as business lending continues in North America?
Yeah, and from our perspective, obviously, we want to be there for our clients in our market to help their customers respond and rebound from the pandemic. So we're helping credit unions and community banks primarily be ready for that. And like I said, I think the recovery could happen pretty quickly here. And so what does that look like? The holy grail here is sort of combining the best of all worlds from all these different providers. And if you think about, if you could combine, the cost of capital and the access to performance data of a big bank by aggregating data from a number of smaller banks, right? And if you could say access the commerce data from some of the commerce platforms like Shopify or Amazon, and if you could have the tech of the fintech lenders, which is where we were born and have, but still have the relationships and the service and the local knowledge of credit unions and community banks. If you could put all that together in a package and use that to service small businesses, like that's where I think the big win can be here. And there are people sort of on that path. We're certainly on it. We're not quite there yet in terms of pulling all that together, but that's where this world is heading. And then I think the service levels and the opportunities for small business will be significantly enhanced as they move forward.
It's absolutely brilliant. And yeah, it's interesting you do raise that point of the bank isn't going anywhere. It still has that trust, still has that relationship that is so critical when it comes to financial services. And yeah, I think that's a really realistic kind of view of it. But Gord, I think that's all we have time for. Thank you so much for your insight and your input into the North American side of things. So it's been really insightful. Thank you so much.
Yeah, thanks very much for having me. We'd be happy to be back anytime.
Brilliant. So thank you also to our viewers for watching. You can catch the rest of the series and much more over at www.fintechf.com, and of course YouTube and LinkedIn, where I'll see you in the comments. So once again, thanks very much, Gord, and goodbye.
Goodbye.